didn't finish at Brunel, dropped out, was out for a little while, and we don't really know where things are going sometimes. We're just like, okay, well, I've gone to school, now you go to college. I've gone to college, now I go to uni. But like, you know, that was who was writing that story for me. It was like it was written and I was just going with the flow as opposed to deciding what I wanted to do. And I'm there kind of scratching my head like, all right, cool. I'd always had jobs. I was always kind of busy. I was always financially okay. And I was like, yeah, I've messed this up. Understanding that everything really is a people business, whether you're selling yourself, selling properties, selling, you know, lemonade. My thing is that I've never been like, okay, I'm trying to grow the biggest portfolio right now. So the first one I told you about, I sold that. The next one I sold that. Deals, I sold them. But generally speaking, as a rule of thumb, property is quite forgiving because you're buying a tangible asset. You know, I have days I'm just thinking, this is long. I'm tired. It's like,
really? You think it's long even though you've achieved so much?
Yeah, I think it's long. Like I just think, like, you know what? Like I could just chill. Like I could just chill. I could just have my buy-to-lets, have a portfolio, sell out some of the development. You know, you could buy up north.
What's the most money you've made on a deal? Welcome to the Takeoff Experience, where I sit down with highly driven people to talk about their journey, their failures, and their successes. If you want to take off in your career, your business, your finances, or your mindset, then this podcast is for you. Welcome back to the Takeoff Experience. We have a very special guest in the building. Kazy, how are you doing today?
You know, I'm intermediate. I can't lie to the people. I can't say I'm doing good, but you know what I mean? The weather is getting me down, but one thing I think super important is if you make a commitment, you got to stick to it. So,
yeah, I love that. That. And yeah, definitely appreciate you coming in today. I mean, today, people are going to be listening from 3 weeks from now. Today's the day it's snowing, so the weather is terrible. It's absolutely terrible. So on a scale out of 10, how are you feeling?
Do you know what it is? You know, when as soon as you step out of the car, like, and I've been in and out of the car, in and out of meetings all day, I feel it in every bone in my body. Like I feel the cold, but it's, you know, you have to persevere and push through.
It's all right, man. It's all right. I won't keep you too long. So the first question I've got for you is, who is Kazy?
So, I mean, Kazy is I, and I am Kazy. Kazy effectively is like, you know, I could almost call it an online persona. Starting lockdown, first one, 2020, there was a case of, you know, everything stopped. And yeah, two choices. You can either just enjoy the stop, enjoy the break, or take an opportunity to kind of reflect. And I was never really on the social media space. So I started highlighting what I do, just kind of talking through my projects, kind of being very transparent with the numbers. And effectively what I do is I'm a property developer and investor. So investor means I buy assets, but developer is basically where it's your job to take that asset and add value.
Okay.
And that's effectively what I do. In terms of the online space, we would call it just sharing, I guess, some of my journey. So I'm also what you would call in the content creation space in property as well.
Cool. Love that answer. But I want to know a little bit more about you. So where are your parents from?
So my mum's English and Welsh, actually. Can't discount the Welsh. So English and Welsh, and my dad's Nigerian.
Cool. Were you born here?
I was born here, yeah.
Born here. Have you ever been back to Wales or Nigeria?
Do you know what? So I've been to Wales for the first time, 2021.
Slid out.
Ironically, first time. I think a lot of us, like, and I think, like, it's, you know, sometimes when you ask people from the UK, have you been to Wales? You've been to Scotland? You've been to Ireland? A lot of people haven't, and then we cuss the Americans. For the
in it.
Potato. But yeah, I've been to Nigeria. I've been to Nigeria a lot. We're just finishing off some work over in Nigeria as well.
Doing some property development there.
A family home.
Okay.
That we're developing into a number of units.
Nice. What do you think of it out there, Nigeria?
Luckily through connections, like, you know, a lot of business is people businesses. So the person who did the initial shell and core of the project, where a lot of the stress can be, was actually a landlord of mine. One of my first rent-to-rent landlords that I've been managing. I've still managed some of his properties now, even though I don't actively really do rent-to-rent. That's probably going on 11 years, 12 years, because that was before it was even called rent-to-rent. It was just a case of...
What were they calling it back then?
It was a case of he was overseas, estate agents in the UK was ripping him off. I could see it, and I just said, oh, what's going on? So the people are not paying him. And I just looked at basic numbers. I said, okay, what's the place worth? Okay, how much you getting per room? Like, how much do they rent it out for? It just didn't make sense that they couldn't pay. And it was just they were taking advantage. So just sort of stepped in, provided a good service, and obviously built relationships. And that's who ended up building out the shell and core.
Okay, wow. That shows the power of networking, right? I think building a good network.
The thing is, like, a lot of people always wonder where to get started in property or with anything. But like, you know, if you provide somebody a good level of service, like with an entry point, whether that's like being conscientious enough to hold the door open for somebody that can start a conversation, whether that's being a really good estate agent or a really good, like, you know, staff in customer service, those things do get noticed, particularly by people that understand the importance of those kind of, you know, those minor details.
Wow. No, we're definitely going to talk a lot about property today, but I just wanted a bit more background stuff. So I'm assuming from London. Whereabouts?
South London. So
South London, yeah.
South London, yeah.
Did you grow up in South London or another?
Yeah,
part?
like I've always been sort of in and about South London, and that's why I've always invested in South London, because that's, for me, you know, like my kind of educational background was economics, so like there's a principle of specialization. Like if you've got a skill and I've got a skill, even if you're better than both of them at me, it's still more efficient for me to focus on one thing, and then we trade. Yeah, because then we both get the benefits of that trade and the specialization.
That's an interesting perspective to look at it. So you said you did economics. Did you do that all the way throughout to university?
So I did it at so A levels. I did it at Brunel, so that's when I was in West London for a little while. Did it at Brunel. Didn't finish at Brunel. Dropped out. Was out for a little while.
Why? What was the reason?
I think it's just timing. So you know, naturally, we just kind of, like, a lot of the time we follow like the trajectory of this is just what life is. And we don't really know where things are going. Sometimes we're just like, okay, well, I've gone to school, now you go to college. I've gone to college, now I'll go to uni. But like, you know, that was who was writing that story for me. It was like it was written and I was just going with the flow as opposed to deciding what I wanted to do. So I think it wasn't the right time, which is why I underperformed. But, you know, I still wanted to go back. I enjoyed the vocation when I was studying at A level, and I didn't enjoy it because it was the wrong time at university.
I love what you just said there. Like, you felt like somebody else wrote the story and it wasn't you that wrote the story. And it seems like you had a realization about that. What did you end up doing then at that point?
So do you know what? That was like, when people say, oh, like, what was your low moment? Like, what was a moment where you thought, because I did an extra year at college. So that's already, I'm already like 19 going to university. Then I did 2 years and dropped out. So I'm 21. So my peers now, like the ones that did, you know, did the university route, or even the ones that, you know, went straight into employment, maybe from school, like the ones that went into employment had 5 years of work experience. The ones that have gone into university are on grad schemes, you know, the ones that were popular then, whether it's your KPMGs, your Deloittes, Lidl, all of the ones that were popular grad schemes. And I'm there kind of scratching my head like, all right, cool. I'd always had jobs. I was always kind of busy. I was always financially okay. And I was like, yeah, I've messed this up. And that was kind of like, I had a moment, and I kind of spoke to my dad, and I was like to my dad, yeah, like I was proper upset. Like I think I cried. Like I was just like, yeah, I've messed it up. And my dad kind of looked at me and said, yeah, I know. So what are you going to do? Like, kind of like, all right, but what do you want me to do? You're 21. Like, and I was like, yeah, no, I hear that. And that's kind of when, not instantly, probably went to sleep, probably was like, nah, this is dumb. I think I went on a holiday, actually, funnily enough. Went on a holiday, went to Egypt. That's where I kind of, for the first time, saw Shisha in the environment of Shisha. And I was like, okay, this is cool. I like this. They always say do something that's your passion. So bought Shisha pipes and set up a Shisha business, which was like my, outside of, you know, paper round and leaflet delivery and other stuff, that was my first business.
Okay. Wow. And I think, I saw a bit about that Shisha business. How did it go generally for you? Did you enjoy it over time, or was you like getting to a point like, okay?
No, I really enjoyed it at the beginning. Like, you know, it's a super social setting, you know, it's entertainment, it's hospitality. So it's kind of like, if you like that, then it's good for that. The margins at that point in time were like 1,000% markup on Shisha. So
of course,
Shisha,
I guess you were one of the first.
So we were early, not like, you know, but early adopters into, because it was like, you know, smoking ban happened maybe 5 years before that. Everyone was building up these nice smoking outdoor smoking locations. So you're going in there and you're giving the venue a value proposition. They don't really know Shisha. They don't know how to say. I'll be like, listen, I'll run it, I'll provide it. You just let me in, I'll clean up after myself, and let me charge the consumer directly. Now, like, the events are even saying, oh, is the Shisha guy going to be there? Like, make sure we want him on the flyer. And, you know, it's good margins, it's social. Like, so we did that. We started doing festivals. Festivals were cool because, like, you know, realistically, I don't know where I'm going to fall in labor laws, but obviously I just offered, like, my friends, I was like, look, yo, they're giving me like 10 tickets to V-Fest, for example, or festival. And I said, look, they're giving me all these tickets. You lot come, work a couple hours, and then go to the festival when you want. So I had my friends kind of working for me and helping. Wow. And then, so we was making like really good money there.
Wow. So then, what happened at that point? Because you got into property after that, surely.
No, right? so then I got a premise, but I had like something called a license. Right. So I'm not sure how much you know about commercial property. No, but effectively, with commercial property, when you take like when you rent a commercial property, the legal procedure is very much like almost not like buying it, but you do full on conveyancing.
Okay.
So that's your property now that you don't own, but you take a lease.
Okay.
The same way if you buy, buy a flat, it's leasehold.
Yeah.
So you're responsible for the repairs in that building.
Right.
You effectively, generally speaking, it's within inside the leaseholder like reformat. You can extend the lease, indefinitely. So that's your business forever.
Yeah.
When you've got a license, it's much more like a tenancy agreement. If the landlord's like, yo, sorry, like we got other ideas, want to give you 2 months notice. So I couldn't, even though the business was profitable, couldn't really invest in the way I wanted to, and it kind of they just sort of just.
Was he just being difficult, this landlord?
No, it was. I had a sub. Yeah. The license was granted by a leaseholder, so the owners was the council. They'd granted a license to somebody else. Granted a lease to somebody else who granted a license. So it was one of those sort of too many cooks in the kitchen.
This is very complex, right? For somebody just wanting to do their own business,
run a business,
right?
But it's the understanding of I think those complexities and the intricacies that effectively you got to be in a position. That's something that every experience you take something away from, and it's how to solve a problem. Yeah. So even in property now. Like properties with lease issues, subsidence, Japanese knotweed, all sorts of different things.
I remember all of that. Hearing all of that.
All the things to run away from.
Yeah.
Like I'd run towards them, and be like, okay, cool, they're a problem. Yeah. Give me the right amount of discount, and I've worked out. I know how to solve them.
Okay. Wow, that's crazy. Okay, so then, what was the first property then? Because obviously the Shisha stuff didn't work. Then. What made you say, okay, let me go property?
So I actually went back to university at the same time I was doing Shisha. I finished my university degree whilst I was running a bar, whilst I think I bought my first property, like from, so the first property, I remember my broker, and I remember speaking to him, being like, I found this property. I think it was an auction property. I think I bought it on a bridging loan.
Mad.
I think, so it was all of the, are you sure things?
Yeah.
But luckily, and he was like, this is a baptism of fire. But, it transpired and it worked, and the plan, we executed it. And effectively, that was like the litmus test to say, okay, can this work?
Wow.
Because you've seen it, whether you see it on Homes Under the Hammer, whether you see like friends doing it, hear about other people doing it, you see it. And it's like, one thing that I really learned is you don't need to reinvent the wheel. Yeah. Like you can just take an existing idea and do it better.
Yeah. So what, for that auction one, was it like completely all right? Like there was no problems with it?
So it was a housing association disposal. So for those that are not like familiar, so some institutions have to sell their products when they dispose of them for like the highest price. They have to take them to a public auction. So because that's just the way they dispose of their properties or their assets, there's not necessarily a problem. They're just looking at its stock that, maybe is worth too much, and they want to buy stock in cheaper areas. So they have to sell it there. So it's not necessarily, there's 3 types of properties in auctions. Generally, like a distressed seller, somebody who's fell into financial difficulty and has to sell it really quickly. A problem property of things like they've got loads of issues. And then, institutional sellers, whether that be like the government or whether that be like housing associations. And generally, obviously, it's not 100%. You've still got to read the legal packs, the special conditions, do all of your due diligence. But generally speaking, they tend to be a safer bet. They tend to have brand new leases, 125-year leases, peppercorn ground rent, so low service charges.
Yeah. Wow.
It takes a little bit of the risk element out of it. Not all of it. Yeah. You still got to do due diligence. But
wow, you've definitely dabbled a lot in auction properties from the way you're talking. I've never heard of any of the different types. I mean, I assume that most properties on auctions were some sort of default happening on a mortgage. That's it, really. I didn't really know about the other ones, housing associations, or
because it's institutions, and institutions have to be seen to be being like transparent. Yeah. So if for example, sometimes somebody passes away and they have nobody to inherit the property. After a certain amount of time, that property has to be sold. You can't just leave it vacant, forever. So they sell that property, but the government can't just give it to an estate agent who might give it to his friend because there's too much opportunity, for muddied waters effectively. So it has to go to auction. Same with housing associations. And then you also have, like I said, people that buy something. Sometimes, you can use websites like, I think it's AIG, I believe it is. AIG, EIG. They don't pay me, so I don't mind. But you can use them to see how frequently a property's been in auction. Because if you see something's been in, sold, come out, sold again, you're like, okay, there's a big problem with that.
Okay. Huh. I'm going to check that out. So I was wondering, so you got your first property, but were you doing it full time at that point? When did you decide, okay,
so do you know what? Since then, like basically from when I closed the bar down, the Shisha bar, then effectively I didn't have any other vocation. So I was full-time in property. I may have not been the most busy person in the world, but that was my job.
How were you making money initially? Because obviously when you first buy a property, unless you're renting it out, there's no money coming out.
So again, even before that, before I set up a rent-to-rent business, I still had some rent-to-rent properties.
Oh, okay. So you did some rent-to-rent during this.
But it was just like at the time, it wasn't rent-to-rent. It was like, okay, cool, like some overseas landlords. And again, it's all about looking at opportunities.
Yeah.
Some of the most basic, business principles, whether that's SWOT analysis, whether that's like Maslow's hierarchy of needs, and all these things, like if you actually implement them, you'll find that just think them through in different kind of like analytical scenarios, and they really help.
Yeah. Do you feel like the techniques that you use to find a rent-to-rent would still work in today's climate? Like what you did, like the way you did it. How did you find them actually?
So, in terms of finding rent-to-rent, it was a different market in that, but for good and bad reasons. And that's why I said do your SWOT analysis. So for example, let's say we looked at the rent-to-rent market then.
Yeah.
You do SWOT and you're like, okay, what's the strengths of the market? It's quite a new thing. No one really knows about it. So you can be an early adopter.
Yeah.
The weakness is that because nobody knows about it, you've got to really sell everything and make sure there's maybe not the mortgages in place that can allow landlords to, kind of feel secure in it. So, and then just kind of obviously looking at where the opportunities are and just going through the full circle of, okay, what can we look at to do a deal? Yeah. But in terms of how we secured them, it was across the board. The only thing I didn't really push that hard was the popular direct to owner, like going through the HMO list and direct letter campaigns.
Okay.
They do them, but do you know what? Funnily enough, off the back of one of those campaigns, I've given one of my HMOs to a guaranteed rent company. Okay. Now in this market, because the letter just came through at the right time, right place, and was well presented. I might have received 200 of them.
Yeah.
But it was just the one letter that came through at the right time. Yeah. If a letter's costing you, what is it? I mean, obviously you got to pay for postage now, which has gone up. But if it's costing you 50p, I'm not sure exactly what it is, but it's not a poor investment. How many do you have to send out before one covers the cost? But generally speaking, when I was doing it, I was doing rent to HMO.
Okay. What's that?
So a HMO is a house of multiple occupancy. Okay. So it's becoming more and more common.
Yeah, it is. I'm hearing it a lot.
Yeah. So HMOs are super, it's basically because yields, which is like the return you get on your investment from an investment, are not that high in London. To kind of deal with that, to maximize the rental yield, a lot of people, HMOing, and not just in London, but, in hubs all over the country.
Yeah.
Where there's that rent demand.
Yeah.
But to go back to your question in terms of how we sold, I think it was a case of just having a pitch and understanding that everything really is a people business, whether you're selling yourself, selling properties, selling, lemonade, a lot of it is just like people and product combined. So at a starting point, understanding who your landlords are. So if I want to sell to a landlord, landlords are not all the same person. If you, for example, you have your home, this home you maybe inherited, you met somebody, you're like, okay, I'm going to move out the house and I'm going to rent it out. But that was your family home. You've you're an emotional attachment landlord. You want to know that somebody's going to love that home like you have and like the generations of your family had. So maybe that's going to be your driver, and understanding that means you're going to know how to sell your proposition correctly to that landlord. There may be somebody who's, just a landlord in terms of, I just want to know my investment. What's my bottom line? What's my numbers? How are you going to give me security? So I think just really understanding the landlord as a starting point, and then just building up a confident pitch. So to start with, we're trying to do a lot of direct to landlords, trying to go through.
Direct landlord means you try and find a landlord.
So you can use things like platforms where landlords market their property directly themselves without the use of an agent. So that's like your Gumtrees, Open Rents, Spare Rooms, etc. And then also, all sorts of things. One big one I give people is go to networking events that have nothing to do with property.
Okay. Because like a business one. Yeah, that's
go to the one for the GPs. Somebody who's super cash rich and time poor, most likely have invested in property or considering it, and be the property expert in the room. Don't be the property guy amongst 100 other property guys.
That's a very good point. That's so out of the box thinking, and I think something like that, I didn't even think of it. That's actually genius. You're right, because firstly, there'll probably not be another property person there,
and like even if there is, you're just bigger pool, more people to talk to, people that where you are providing expertise. And
you know what's crazy? I remember actually somebody did something strange. So my property, I only have one that I live in. So somebody literally posted a letter to me saying that they wanted to buy my property. It wasn't from a big agent. I guess it was maybe somebody wanted to buy property undervalued and then do whatever they wanted to do. I found it quite fascinating. I was like, oh, this is interesting. I've never seen anything like that before.
It's just like fishing.
Yeah.
Like,
basically.
the adage of you miss every shot you don't take.
Yeah.
So how much did it cost to, there's companies that, it probably was a big company, but they probably handwritten it to make it look more personal.
Yeah.
And you can pay companies to handwrite your letters or print them so they look handwritten.
That's crazy.
And it's just a marketing strategy. But how do you want to fish? Do you want to fish like really direct where you're going to a networking event?
Yeah.
That's the rod and the reel.
Yeah.
Do you want to fish really broad, like the big net and just cast it and catch what you can?
Yeah.
It's just different techniques, but with the same end result.
That's crazy.
Get a fish.
So how many properties are you managing right now in your portfolio currently?
So, I mean, for me, my thing is that I've never been like, okay, I'm trying to grow the biggest portfolio right now. So the first one I told you about, I sold that. The next one I sold that. Deals, I sold them because if you start, like if I give you this example, you start with £80,000. You go and buy, even let's say, for argument's sake, I'm going to use round number. You start with £100,000. You buy a property for £200,000, which means you got to put down your deposit. So give or take, you got to put down 70,000. You pay your stamp duty fees, refurbish, and you're all in for 100,000. If you now refinance that property at the end, and you refinance it for 280,000 or something like that, you've got approximately, £70,000 of equity in that property. Now you can pull out some of your profits, which will be, so you can pull out some of your own money, which will maybe be like 50,000. But the issue is you then only got 50,000. That's not enough to go again. So you've got to wait for that property to appreciate in value. Whereas if you take out all of your money plus your profits, then rather than the 50, you've maybe got 140, for example.
Right. So you're just flipping.
So I was just flipping because my thing was in terms of, you can be in a different mindset. You can be in a place where, okay, I'm trying to retain the wealth I've already got. And like, I'm just trying to look after that wealth and make my money work for me. Or you can say, whether it's not, I'm young enough, or I'm active enough, or I'm hungry enough that I want to be out here and I want to I want to work my money. So I want to put the work in. Okay.
So I guess you said it. The con, some people say, to that approach is that you're having to put time into
it's not
flipping, right?
It's not you've got to put the time in, but it's like, what's your time worth to you? Okay, so for example, I just finished like a deal over in Streatham, and I think one thing I always like transparent about the numbers. We bought it for around £520,000. It basically had established use for it to be retained as 2 flats. So we sold each of those flats for around, say, 425,000 and sold the garden for 50,000. So basically 900,000. We bought it for 520. Cost of works another, call it 100,000. Then you got the cost of finance, stamp duty, etc. Just for argument's sake, say that's taken us all the way up to 700,000. It means technically, if we refinance those properties that are worth 900k at a 75% loan to value, we can basically keep those properties for free and get all of our money out that we put in it initially. But we've still got £225,000 in that property. Now, those 2 buy-to-lets, assuming current rates, they're probably making you about a couple £100 a month each, which is maybe, even if you're lucky, £5,000 a year. Do you think, like right now, if I said, do you want £5,000 and you got your money sitting down there a year, or do you want 200 odd thousand to go and reinvest in ideas that you have right now? What would you take?
200,000, man.
And obviously, you need to bear in mind like the downside, because let's not pretend like there's not capital gains tax to pay. Like there's not the time you have to, and also you miss the fact that properties, generally speaking, maybe not for the next year, but do appreciate in value. So you miss the capital appreciation. But it's
true that.
Can you effectively outwork the capital appreciation and the rental yield?
Yeah, I wanted to ask you because I was curious. Like you mentioned renovation. Where did that part come from? Like, how did you learn that? Because a lot of the listeners, obviously, they want to get into the property game. They might be interested in flipping, but they're like, okay, but I don't know how to increase the value of a property. How do I do that?
Like, again, it's, for example, don't get me wrong, there's like some people that do courses. They can take you through their courses. There's all the information is out there as well for free, pretty much. Like whether it's myself, whether it's, I can name like 10 different people with property podcasts that all do great stuff, and there's hundreds of hours out there, but obviously you got to dissect the individual information, so really immerse yourself in actually the learning. Once you feel confident enough, then you've got to get out of the the mindset of, okay, I've got to learn and start doing, because you don't want to get stuck just in that wheel of learning forever. But I think for me, generally speaking, as a rule of thumb, property is quite forgiving because you're buying a tangible asset. As long as you you can do your comparables and you pay a good price day one, then you can maybe afford for the loan to go on for a little bit longer.
Okay.
For you to maybe overpay on the build, or maybe get the design a little bit wrong and not really kind of meet the target of your end user exactly, because it's more forgiving than a lot of other assets. Like, people that were into stocks and crypto and watches have seen like, massive drops, whereas mad property drops. Prices, they're projected to drop, but then in reality it's going to be like, the higher end of the market. So the stuff that was on Help to Buy that people were paying a massive premium for, the newly refurbished properties that people were paying a massive premium for, in the same way that you pay a premium when you get a brand new house. Sorry, a brand new car.
Yeah. And that's the thing. I think it's interesting that you said property is forgiven. I think, you're absolutely right, because people always need to live in property, and I guess you can rectify most things. But I think, like, the stumbling block for a lot of people is when they think about renovation, especially when it's a new thing.
Yeah.
They think it's so difficult, they may not start. But, I was going to ask you actually, and I think you kind of answered it, like, which should you do first? Should you just go ahead and learn, or should you learn and then go ahead? And I feel like
it's personal analysis. There's no right answer. Like, how do you learn? Because I'm quite an active learner.
Yeah, I'm an active learner as well.
I need to do stuff. Like, so my thing is, I'll be on site, like, everything is why. Like, okay, we can't take that wall down, you need to put a steel in why. Like, but we can't, whatever the case may be, like, we can't put a flitch beam in because of X, Y, or Z. Okay, but why? So I know then the question to ask. So even if I'm going back to a friend that's in the industry and they've explained to me the rationale, so then I have the information to have a conversation outside of the expert that I've employed, so I can get a second person opinion.
Okay. Wow, that's so interesting.
But I think obviously you tier it. You don't necessarily start with a massive new build scheme. So one of the quote unquote easiest ways to get into property is is like your own residential home. Now, it's not easy by any stretch. I'm not saying property prices are cheap, but it's your lowest deposit, it's your lowest barrier to entry. It's down to obviously your affordability, and if you're willing to compromise on what it is you want, then you can get onto the ladder earlier.
Yeah, I mean, in London, only for a lot of people, they ain't going to be able to afford that.
But then, do you know what? You say that. So, for example, I do like my consultation calls where I talk to people. And they don't mind me mentioning it, but I spoke to like a couple last week. They're early 20s, I think 22 and 23. And they're both like in McDonald's. They're both like supervisors, been there for a while. And collectively, they earn like 40K, give or take about 20K each. Now, a lot of people would look at that and say, oh, well, I can't get anything. I can't. But, so they were saying, oh, we're going to, we don't know what to do. And I had the conversation. It's like, but what a lot of people don't do is they're so, I can't do it, it's too far for me, that let me not even ask the question. Because if you go and sit down with a mortgage broker and they turn around and say, okay, because you're currently living at your parents', you've got no car on finance, you've got no outstanding debt, you've got great credit, give or take, will lend you 4.5 times your earnings. You've now got £40,000, which means they'll maybe lend you up to £180,000. Like, and because they're living at home, it was feasible for them to, save sort of £600-700 a month each. Over a course of time, they can save their, not instantly, but through different things, like say a deposit of 10% at 20,000. You're now looking at buying a property for, let's say, 180,000, because you still need other costs that are going to be involved, like your legal fees. You might need to furnish, etc. But it's possible. We went to look and we found like a flat, and it wasn't what they wanted. Like, ideally they wanted a 2-bedroom flat, but they were like, look, you know what? We found a flat. It was on a high street. It was above commercial, but they spoke to a lender that said they'd do it. They were happy with a commercial underneath, and it was like £180,000. It was a good buy as well, because that's actually a high street that I know is about to undergo regeneration. It's got like a multi-million-pound high street regeneration fund. So they're going to benefit from that. And there's this old saying that it's very hard to time the market, and people always want to know when's the perfect time to buy it. And it's like time in the market versus time in the market. Because if you're on the train, you're part of that journey. So when it starts moving, you're part of it. And if it moves the other way, as long as you haven't overexposed yourself and over leveraged, like it's a long-term investment.
Yeah. Okay. Wow. That's motivation. I'm gonna ask you for more tips on the property stuff. But I just was wondering, because you're saying you flip. What's your target then? Because you must have a target. Well, what's the target gonna be for you to stop, or you never gonna stop? You're gonna be
I don't know, because it's like it's when it stops being interesting. So like I'm scaling in terms of, whereas you might have been doing you know, one deal, you do 2 deals, whereas you might do 2 deals, you do 5 deals. You just look at scaling, you look at bringing in the right people, building a team, doing bigger projects. Because to now, I generally do like smaller scale residential conversions. That's like, you know, 2 to 9 unit schemes.
What's that mean? 2 to 9 units?
So that's the number of properties that like, so buying residential property and converting them into like multiple dwellings, so self-contained flats.
Okay. When did you get to that point? Were you always doing that, or were you doing just flipping?
2015.
Okay. So quite a while
after,
now.
Like, after a couple of years of doing the 1 beds, and you know, the thing is everything is just about staying active. Yeah. Like a lot of people will look at, you know, somebody's trajectory and say, oh, you know, they look at a deal they did and the deal that was the unicorn deal, the amazing one. They're like, oh yeah, but if they didn't do that deal, that's where they got lucky. Okay. And like, but the thing about it is like you create your own luck by staying proactive. Like one of the best deals I did where I was hoping to make, you know, maybe 30, 40,000. You know, so I said, I could have left the deal alone because I said maybe it wasn't enough. We said we did it, ended up buying the flat upstairs. That same property, you know, with the same amount of money in, ended up making, you know, over, I think it was like 150% return on investment, maybe even more than that. Wow. So it's like, but it was just right time, right place. But you got that by being proactive and doing things. Like, I don't know, it's whatever you're doing podcasts. Yeah. By you doing them every week and being consistent, you might be at the right time, right place to get the guest that, you know, everybody else wants. That is the one that propels the, you know, the podcast and the platform to the next level. Yeah. But if you were never out here doing it, you're never going to get luck. Yeah, it's true. I do believe that you definitely create your own luck. I don't feel like you said, if you're not doing it, you don't have the opportunity to be part of something that's going to be there. This is not an awkward question, but what's the most money you've made on a deal? Like, what's been your biggest deal? I mean, you know, have to be. Everyone's very tax efficient in business, so it's like, you know, the deals can make money. The deals can, you know, make you know, upwards of, again, in terms of time frame, maybe like a decent amount of money. I don't know what that decent is, but it's very, you know, perspective, but maybe 400,000 or 500,000. Okay. You know, but it just depends, like, because it depends how long it takes you to make that. Some people would look at that and say, you know what, like I make that in a month from day trading, but it's their exposure to risk. Yeah. Whereas I think the structure that I've built is a bit, you know, for somebody who's like myself, naturally quite risk adverse. But
you're risk averse?
Yeah, like I manage my risk very closely. Like I've had people, you know, offer me, I think back when I did that sort of 2014, 15, people offering me like, you know, millions of pounds to go and manage. And I said, look, I don't think I'm ready to do that right now, to take that step. In terms of like tiering debt on debt and, you know, borrowing from this and being over leveraged again. I've always tried to remain pretty safe.
That's good, and long may that continue. I feel like you're very super intelligent, driven, doing everything the right way. But we've got a bit of a bear coming on us at the moment. So of course interest rates have, you know, increased a lot. Inflation is rearing its head. How's that like impacted what you're doing at the moment?
I mean, like a lot of stuff is like, it's serious. But it's, again, and if you've got a single buy to let, like I completely understand. I've seen some letters come through the post and it's like, you know, I've got one of my HMOs and I think we were paying like £1,200 a month. The market rent in the area is probably, I don't know right now, but maybe 1,600. Yeah. We were paying 1,200. Now, interest rates, because if you were on a flexible product, that same loan would have gone up, you know, if you left it on a variable rate to like 1,900, which means you would have been at a loss if that was your sole investment and you weren't able to go out and get another mortgage. Yeah. Now, for most people, there is a product switch and you can switch. So, for example, I switched that product. I pulled out an additional £90,000 of equity and my mortgage went from 1,200 to, I think, 1,490 or something like that. So I've pulled out an extra £100,000. I've got additional borrowing, but, you know, on £90,000, and it's not gone up that drastically. And because it's a HMO, you know, it's bringing in 3,000, you know, sort of 200 after bills. So it's still a good investment. And I think people buying properties now have to stress test their deals a lot more. Yeah. So the 3 key components, like particularly for flips, like what if, you know, it takes longer than you expected and your cost of finance goes up? Particularly if you're on a bridging loan, because a lot of bridging loans are switching to variable rate products, which means you're more exposed to market forces. The second thing is, what if there's a dip in the market and your resale prices drop? And then the third thing is that, with political instability, with Brexit, bill costs are going up as well. So what if your bill costs go up? And if you stress test to deal with all those three things, and it still makes sense, then that it's a good deal. But I think it's a little bit more attention to detail when buying and buying smart. I think like loads of things. There were loads of crypto geniuses and loads of stock geniuses when we were in a bull market and everything was great.
Yeah,
a lot of people, whether it's in the property space or whether it's in other spaces, are going to disappear.
Yeah,
because they were riding the market as opposed to actually creating value.
Yeah, and that's the thing. I feel like with low interest rates, I think we almost forgot how good we got it. And the financial crisis wasn't that long ago, but again, people got comfortable again quickly.
Yeah, I mean, but everything's relative.
Yeah.
Because, for example, again, I use this example, it's slightly changed now because rates have kind of stabilized a little bit. For a little while, people were saying your average interest rate you're getting is 6 to 6.5%, on a buy-to-let product, company name. That's what you were looking at. Let's say residential, that's what you were looking at. Now, if you bought beginning of 2021, there's an argument that because the market was going so well, you overpaid, maybe prices were inflated by even up to 10%. So for your £500,000 property, you overpaid by £50,000 and you put in a £50,000 deposit. If I want to buy that same property now, maybe because the market isn't as competitive and it's a buyer's market, maybe I put in an offer at 450,000, it gets accepted, so I pay 50,000 less and 5,000 less on my deposit with my 10% deposit, right? But the mortgage payments over, if they locked in a 2% rate for 5 years, they would be maybe looking at, sort of £1,300, something like that. On the other side, if the same person is now looking at paying 2,100 and paying £800 more over the course of the 5 years, they're paying £48,000 more in interest. So effectively they're in the same place. And it's like, okay, would you rather have got the £50,000 discount day one, or would you rather pay £800 a month less on a monthly basis? So there's always people like, I want low interest rates, I want low property prices, but they pull their market pull and push factors. To be fair, that's a good point. I bet you a lot of people would have wished they had the 2% rate, right? 2-3% rate. But then even a lot of people at that time were still, because I think banks are very savvy, were like, only locking themselves in for 2 years. So even myself, like I refinanced like quite a few properties during that time, but I still only locked it in for 2 years. So we got some amazing rates, but come 2023, beginning of 2024, we're looking at having to readjust.
You know what I saw actually that was very interesting? You can correct me if I'm wrong. I remember when I was doing my 2-year fixed rate, I feel like the longer it was, the rate would go slightly higher. But I feel like I'm seeing, I don't know if this is true, I feel like I'm seeing the opposite happening now.
I haven't. Generally speaking, I don't, because I'm not really in the residential space. So I'm looking at really long term. Like,
are you more in commercial?
No, just in terms of residents, owner occupier residences, where I think that's the case more.
Yeah, maybe you're right. Actually, it's true because it was on my. You're right.
I mean, it could be. I'm not like sure people can let us know, but I think that's the obviously like at the end of the day, the big institutions, they spend millions to kind of project where things are going and they're predicting the market. So all of these things maybe kind of give you an indication. And I always say, like, when you said about getting into property or getting into business, like a lot of the times when you're not sure, follow the money. So like when I wasn't sure where to invest or where's a good area to buy, but I could see, we were investing in HS2 and Crossrail, and they were talking about potentially, Dartford, Disneyland, it's like Disneyland England. It's like, okay, cool. You see a lot going on over there. So I don't have the money to invest to do the market research, but they definitely do. They're building out, thousands of flats on the waterfront in Greenwich. So I know that if I'm buying houses for 350,000 and they're selling flats as new builds for 500, eventually that price is going to trickle down.
Wow. That's such a. How do you find information like that? Because I did hear about the Disneyland near Dartford. I live around near there, so I kind of heard about it. I don't know when it's coming. But how do you find information like that?
I mean, there's a lot of like, you can go online and look at like, development plans, and a lot of it is maybe like they talk about Westfields in Croydon. It's not a definitive, but outside of what's maybe happening, like the Dartford, you can see the crossover is happening. Like they're there building it. It's in place. They have plans. They have development plans.
It's a game changer. Is mad. Like I get like to it will take me normally, let's say Tottenham Court Road. If I was to get to Tottenham Court Road, probably over an hour. Now drive to Abbey Wood, probably about 10 minutes. It's 20 minutes from there, so half an hour. Cut it in half, like that. So it's crazy. I was wondering, like, to ask you this question, like, Do you feel like buy to let is still profitable in this economy?
It's, it's harder.
Yeah.
It is harder.
Yeah.
They are bashing the landlord a lot, particularly, so with changes in tax that you can't, as a person owning property, you can't claim the majority of the interest element as an expense anymore. With the stamp duty rises and additional premiums for second homes. Just with legislation around requirements for landlords and landlord licensing, they're making it harder. But what you have seen is, outside of that, again, follow the money, we've seen the biggest uptake of institutional landlords. So the other day, I don't know if you saw an announcement, but John Lewis have pledged to buy X many homes and they're invested in property.
Okay.
And over in America there was another pledge, I can't remember from who, to say they want to have 1 million single residential units or something like that. So I think, again, it's kind of not conspiracy theorist, but you bash the landlord, you make kind of your standard landlords have to sell. Institutions pick them up, and they pick them up where they're geared lower. So whereas we might be geared at 75% loan to value, they're geared at 50-60%. So it still makes it viable and profitable in the short term, and over the long term they benefit from the capital appreciation, because we're a small country that's highly desirable. There's a limited amount of space. So over time, we've never met our new homes, new homes quotas from the government. They've recently said they're going to remove quotas for building new homes because they haven't ever achieved it.
Okay.
So yeah, we'll see.
Mad. That's crazy. What strategies do you think will work in this current environment? I know you're flipping, so I feel like flipping. Is there any other kind of strategy?
Flipping is flipping's probably got the most exposure in this strategy, because you're exposed to the most amount of things. You're exposed to interest rates, you're exposed to property prices falling, and we're exposed to the build costs. Yeah.
Have you seen like a massive increase in it?
There was a point where glass, steel, timber was increasing, 5-10% on a regular basis.
That's insane. And they say that inflation is 10%, right?
Yeah. So the material prices shot up. There was a mass exodus of contractors after Brexit, so labor prices went up. So flipping's difficult, but again, it's you're never going to get the best of everything. So because flipping's more difficult, there's less people are doing it. Lower competition means you can be more competitive with your offerings. And I said, property, you make your money when you buy. So you buying at the right price now, even in a market that's not that great. If you offer the right amount of money, get the right deal across the table, it's you're most likely, particularly if you don't necessarily have to quick sell, and you can ride the market out for a couple of years, then it still can be a good investment opportunity. I think if you're fortunate enough, maybe just gear down a little bit. So stress test it. What if interest rates go up to X%? Is it still profitable, or can you? Even if it's not profitable, can you still afford it based on other income? Yeah.
Throughout this whole conversation, there's one thing that I've been thinking about. How, the motivation. What's the motivation for all of this? You're working hard.
Do you know?
I can see it.
There's self-belief.
Yeah.
There's fear of failure.
Yeah.
I
Why?
think,
what are you worried about?
I think because particularly with social media and you being that guy, then there's I've got to keep going. I've got to keep doing the next one, and bigger and better. But even in myself, I've naturally in terms of family, a lot of people relying on me. So it's I know that I'm happy to burden responsibility, and there's a lot of people. There's a lot that I want to do to help. So I think that's kind of a driver. And obviously, everybody, I'm not saying I'm not the most, sometimes I think, I have days I'm just thinking, this is long, I'm tired.
Really? You think it's long even though you've achieved so much?
Yeah, I think it's long. I just think, you know what? I could just chill. I could just chill. I could just have my buy-to-lets, have a portfolio, sell up some of the development. You could buy up north. You can go and buy that for it. Depends how much capital you got. If you got, if you got £1 million, 2 million liquid, you can go and buy 50 units up north. Each of them are making you,
that's true,
£300 a month. You can just be okay, I got £15,000 paying me a month, and that's me, if that's what you want. But I think it's understanding what you want, and I think knowing that I want a lot is what keeps me keeps me motivated.
Oh, crazy! So so the drive is there, but in those days where you're okay, cool.
So I think definitely sounding boards. There's my guy Alex, business partner. He owns AA Drafting, my architectural firm that I work alongside a lot as well. And you know, we have a lot of similar issues. So you got somebody to bounce ideas off. Recently, you saw that we went down to like the property developers, like sort of end of year social. So we kind of met up, like 32 brothers, just speaking about what's going on, people talking, you know, not just the Instagram, the shiny stuff, but, you know, what's going on, how can we help each other, what do you need help with? And I think when you got 32 people in your field that are all like just happy to be there and are all at different stages, like no problem is more than a phone call away. So I think building up that kind of network of people around you. So yeah, man, big them up as well. The guys that put that together.
That's crazy.
You know,
man.
Rowan, Adewale, Ayo, the guys that put that together.
Wow, I love that. And it's so good that you mentioned that, because I feel like, you know, that's an element of accountability. I feel like whenever you're trying to do a journey, it's really tough to do it by yourself. It is really hard because, you know, having that moment of weakness, everybody has it. It's human nature, right? We're humans. We can't be like on 100 every single day.
But there's always a reason not to do something. Like, remember I told you, like, I'm ill today. Like, I'm sitting up, my lower back is hurting. I can feel goosebumps, tingles. But I said, you know what, this is something that I need to do because I said I'm going to do it. And if I don't do it today, then we got to rearrange the time. I know my diary's already busy. What else is that going to push back? Like, there's always an excuse to do something tomorrow. But it depends on how passionate you are about it and how much you value what you've got to do tomorrow as well. You know, whether or not you say, you know, I'm just going to get it done and just push through.
I love that. I love that philosophy, man. I love that. Keep it. Please keep it. I remember one time, I think I saw a live of you a couple of years, 1 or 2 years ago. I think you were in Dubai.
Yeah.
Are you doing much work out there, or was that just...
I got my business partner out there. Got like a business where we make like luxury packagings. We make bags for, you know, some retailers out there. We make some for people here. We've done stuff. You know.
Okay, so you're not just property. You're doing other businesses.
I mean,
as well,
I'm
kinda...
very hands off in that space. Like, it's my company, but I've got a business partner. We kind of bought into an existing business structure that we saw that we could add value to by offering the customer service element, but they would still deal with all of the logistics and kind of like the back end stuff, and we would be front of house. So we got that, looking to kind of grow that business.
Wow.
You know, invest in kind of a few other businesses in the UK as well.
Okay. Wow, that's crazy. Areas 2023, because I know most listeners are gonna be like, okay, where am I investing? Is there any areas in particular that you have that you're looking at in 2023?
I think, you know, I'm focused. I'm in Southeast London predominantly.
Okay, that's just, everywhere.
For me, it's like the reason I'm so focused on that area is like, because if I know an area, you can send me a property and it can be on X road, like call it Riddlesdown Road, and wherever that may be. Like, I know how good that road is. I know if it's in the right catchment area for the school. I know how far it is from X, Y, Z. So in terms of doing deal analysis, I can be a lot more efficient with the use of my time.
Is that because you're just from the area? Is that why?
Yeah, it's like, it's what I know. Like, I've built up a knowledge base over time. I've built up contacts, whether it's from, you know, like I said, and it's always good having people a phone call away. If I'm, you know, sort of second guessing myself on the GDV, I've got an agent I can call up and be like, listen, I'm looking at this. What do you think? 30 seconds, like, yeah, that stacks. You know, we're not really doing the deep dive, having to put a pack together and, you know, all of those things. I think, definitely focus on areas, you know, I think areas that you know are strong, but maybe, so for example, the emerging areas that are already strong, like whether you say it's like your Brixtons, your Camberwells, you know, Claphams, etc. There may be a few people that are like kind of waiting, you know, they're waiting because it's optional for them. Maybe it's kind of like, you know, the typical buyers there that may be like large deposit from parents, etc. So those type of properties that are coming up at auction, people are going to be a little bit scared. You know, the premium for those when they come back to market. So, and when the market becomes strong again, so potentially picking up some of sort of those in those areas that are already there, but they're on the cusp of being even better. Because the great thing about London, it's like a nucleus. It's just zone 1 and out. So as soon as somebody gets, you know, pushed out of Battersea, they're in Wandsworth. As soon as they're pushed out of Wandsworth, they're in Clapham, and it's just so you kind of know, like, price point wise, you can finish to like the Wandsworth standard, but be a little bit further out, you know, maybe somewhere closer to Peckham sort of way, and be like still kind of push that ceiling price to get that Wandsworth money.
It's crazy when I hear you talk about all of this, because I'm from South London as well. I grew up in Camberwell, so it's crazy like how the prices fluctuated and how expensive it got, and I only kind of not regret. I kind of regret in a way for my, you know, for family that grew up in the area,
Yeah, for
that
people
wow,
that
like
could
you
have,
had the
would have.
gold mine and you didn't even know that you had the gold mine.
And that was one of the reasons why I started like the whole
Yeah.
page about transparency, about like, normalizing ownership and having those
Yeah.
conversations, because like when we touched on going speaking to a broker,
Yeah.
a lot of people tell you they can't do it until they say, why don't you just check? What do you lose by speaking to the broker? No credit check, no credit search. Tell them how much money you have, how much you're earning. Be transparent. Talk about money.
Yeah.
Because if you're trying to run a race and you've got no idea what you got to get to, where you're trying to get to, and where you are now, how do you gauge how far you've got?
Yeah, it's true.
So then it's so easy. If you don't know how far you've got, how do you stay motivated?
Yeah.
So work out where you are, and then start running.
Yeah.
And it's not like super rocket science, but a lot of people are scared to know where they are because it will almost be, they think it will be demotivation if they're told they can't do it.
Yeah.
But what if you're told you can do it and you could have done it 2 years ago when you could have got interest rates for half the price?
Yeah, it's true. 100%. Absolutely. I feel like, I mean, like you said, you just need to know how far you are. I remember before I even got my property, I was doing research 2 years, 3 years before.
Yeah, no, you have to. And like in terms of how areas change, like I said, you can kind of see it. Like I remember, I don't know what film it is. It's one of those old English films, like whether it's like Lock, Stock or one of those kind of films. And at the end of it, they're like, yeah. And then she went to go and retire to that shit old Penge. Like, so talking about Penge, like now, like, sorry, no, I think it was Crystal Palace, sorry, or something like that. And then now Crystal Palace won like area to live in London, like 2022. And it's like those sort of transitions.
That's crazy.
That, you know, it happens. I'm not saying it happens overnight, but if you're in it for the long term, I use the example, I've used it a few times, it's like maybe boring, but it's like people that have made more money from their single residential purchase than they have for working their entire life. If you make 25,000 a year, you know, it's just, it depends, you know what I mean? Like, so you work for 25,000 a year, in 10 years you made $250,000, in 30 years you maybe made 750,000. Some properties that people bought, for example, from, you know, Help to Buy in Notting Hill and areas like that for kind of Windrush and like, you know, maybe the generation slightly after them, the way they've gone up in value, they've made more money from those assets than they have from working. So I'm not saying everybody's going to do that, but, you know, if you have the opportunity to get involved smart, then, you know, generally speaking, it can be a good investment opportunity.
Exactly. In your 10 years of being in property, what would you say has been the biggest challenge for you? Because I'm trying to give people a picture of what the day-to-day is like for you.
Do you know what? Like, and it's like, I love builders. Like my builders, my brothers, big up Sunny, Imperial Construction, got Ranch, like my team that I've been using for ages. But like understanding the difference between like the social norms with builders versus like maybe coming out of an office and trying to CC somebody in on an email, particularly at the smaller scale, like can be like, you know, can be super frustrating to the point you feel like I want to pull my hair out. I'm super stressed out. But like the you know, and it's dealing with them, but understanding, you know, those personal skills, that it's a different place. I think a lot of it early on, like I wanted everything to be so smooth. Like I wanted it to be like, right, so I'd make out like full project like charts of you finished and you come in, then you do this, then you do that. And I was like super regimented. And then when it didn't go to plan, I was like, I'm messing this all up. But the reality is like, you know, when you're managing multiple trades, people have got to work simultaneously on top of each other. And you can try and do it really step by step and methodically. But a lot of the times that just ends up being so much slower and like, you know, not a way some people are used to working.
Yeah. Wow. How did you overcome that little?
I think, you know, like ego sometimes. Like, so for example, for a lot of the time, I tell people that, you know, 80% of my job is being like different people's secretaries, whether that's EDFs to make sure they come to connect the new suppliers, whether that's British Gas to make sure they sorted something out, whether that's my contractors to make sure that, you know, they're doing what we've agreed, whether that's chasing councils for planning. You know, there's a lot of chasing and administration outside of the whole like homes under the hammer. I took this and I turned it into that. So I think it's understanding the skill sets. But for a lot of people that come from a corporate space, that's, you know, the organization is a really transferable skill set. If you've come as maybe like a PA, you bringing people together, that's your bag. Like you could thrive, but it's just saying, okay, like how do I bring those skills and take them across and just pivot them slightly to work in this new area?
I love that. I love that you mentioned the fact of transferable skills, which is true. There's a lot of people that are project managers in technology and they feel like, they forget that actually they can employ a lot of those skills in property. So knowing what you know today, what would you do differently if you were to start again?
So rent to rent, I stopped doing when we was managing like sort of 50 odd properties, like 300 units, like 300 like units or room units. I think I would have systemize that better, that would allow us to scale like more significantly.
Okay.
I think there was a massive niche for people that wanted to get into the co-living space.
Okay.
For high-end HMOs.
Yeah.
I think that's something like people are still doing it now. People are raising funding as prop tech businesses, because the reality is, HMOs, like house of multiple occupancies or shared accommodation, are becoming not just something that people are producing, but a necessity. If you've got starting salaries for nurses, police officers, accountants, people, finance, all different people that are on, 25,000, maybe renting that 1-bedroom flat and saving and having a life isn't necessarily viable.
Yeah.
So that shared accommodation space, I think there was a really good opportunity. And I think even now with the market, with the uncertainty rates going up, I think it's a really good time to capitalize on and make money in the rent-to-rent space.
Okay.
It's always properties.
Rent a lot. Yeah.
Yeah, I mean, like for me, it's like not something I'm actively in, but I'm looking at it now and saying, there's money to be made right now.
Really? Still, even now? Oh, wow. That's crazy.
There's definitely money to be made
wow,
right now.
It feels like so many people are doing it, but if you're talking about it like that, it seems like maybe there's not even enough people doing it.
I mean, there's definitely enough people doing it, but like, I said, probably one of the first things I said was you don't have to reinvent the wheel. You just have to do it better.
True.
As the market shifts, changing market conditions, what are you offering the landlord?
Yeah.
Are you coupling a rent-to-rent deal with an option agreement?
Yeah.
Or a lease option? Like, what are you doing with the deal? How are you making it make sense within the current climate?
Yeah.
If there's people that, potentially, going through hardship, that you can help exit their property if it's become a financial burden, that maybe that's a deal to be struck there.
Yeah.
I think, there's always the properties that are sold that have, doubled and tripled in value. But at the same time, it's like, if you didn't sell them, then you wouldn't have been able to buy other stuff. So that's very much give or take.
Yeah. Mad. Okay. I've got a scenario for you. Yeah. And you got the benefit because you got all this skill, knowledge and everything. Yeah. So if you had 20 grand right now to play with, right? How would you flip that to 100? Okay. And you probably say, that's simple for me.
No, I mean, it's just like, flipping something to 100 it's not easy. Like I'm not turning around to say, that's really easy. Like, but I used, and it's all down to your attitude towards risk. You can do loads of different things. So you could, for example, look at that and say, no, I'm just going to buy my residential property. Over time, I'm going to slowly improve it. Going to benefit from, capital appreciation. If you buy a property, like I showed my friend one today, and I was like, look, this property is 280,000 in this current market, going off for 250. You do it up. You can use a licensed total agreement, convert it to a 3-bed. That's worth 350 all day. It's undervalued, but it's just in a bad condition. Like, that's not a £20,000 model, but it's like there's opportunities out there. So you can still buy that property as a residential mortgage, not that one exactly, but something similar to that, and look for an opportunity to add value over time. I'm not saying, it's probably going to take a significant, it could take you 5 years based on current market conditions.
That's still good.
How are you going to save, how are you going to save 20,000 a year effectively outside of that? So it's still good money. Obviously that's about buying smart. I'm not saying all properties are going to appreciate by that much, but with buying a 1-bedroom flat with the scope to add, maybe reconfiguration, turn it to a 2-bed. That's one of the strategies that I employed really early on. Okay. And I did it with a bridging loan, but you could potentially do it with a residential mortgage, which means 10% deposits. You're a lot closer to that capital amount. Buy-to-lets are tricky. Like, you can buy a buy-to-let for £60,000, pay a £15,000 deposit, but you're not going to get anywhere near the amount of money you want to get in a short space of time. But it's an investment opportunity. Rent to rent, you can get into rent to rent. It's got much lower barriers to entry, and again, it's none of these things like are guaranteed to say, you can definitely go and do it. But if you said, okay, like with my rent to rent, I spend £1,000 on compliance, on sort of setting things up. I then take on, 3 deals. Like I'm even going to use so just 3 deals to start with. And they start cash flowing you £800 a month each, like positive cash flow. It now means that, within 4 months time, you can take on another deal and you can snowball like that and have the multiplier effect. And obviously that's down to your capability to be able to actually take on those deals. You could do that. I mean, down to expertise and your attitude towards risk. You could look at, potentially an option agreement for planning gains. So you could see a site, maybe that's, the site could be £300,000 for argument's sake. And you could say, okay, you know what, like I'm going to pay a non-refundable deposit while I go and, try and get planning for an option to buy it at a certain price. Buy it for that 300,000. You buy the option agreement for £5,000 for argument's sake. Could be less, could be more. Buy that option agreement. You then spend the remaining £15,000 and you use that to employ obviously your architects, your planning consultants, to get your relevant surveys done, and hopefully obviously get planning that would increase the value of that land.
Yeah.
You could then resell that. You can buy it and resell it, or you can effectively sell the option to somebody who wants to finish the development. And that could be sold for in excess of 100,000.
Wow. That's crazy. Wow. You smashed it. I think the listeners, we've gotten so much value from you today. I guess a final question from me, really just more for the beginner, from the beginner perspective, and there's a few more questions I want to ask you about what you're planning for the future. What would you say, like, for a complete beginner, like, because there's so much out there, there's so many ways you could start. Where would you say is like a good starting point for beginner to get into property?
It's just
really
it's like anything. Wherever you want to learn, if you want to learn about football, what do? You turn it on. You watch
just
it.
Turn it on there.
You go to the park. You buy a ball. You kick it around. You work out what you're bad at, what you're good at. You then maybe go and do some training, or you then just train yourself on those areas until you think you've got to where your potential is, where you need somebody to take you further. It's the same in everything. Like you're gonna go and do it. Like, find out what you don't like, what you do like about property, where your strengths lie. Have those conversations. Talk to people who are where you want to be. Surround yourself with people that are doing it. I think just like kind of actually actively, proactively, like, be talking property. Like, my first intern, he set up a property page. He hadn't bought any property, but he was just kind of like putting together like property facts, because he learnt them out, found things that he found interesting. He'd put them out and present them, and then people started reaching out to him about working on property stuff, and he started working with me doing some bits. So I think you put yourself out there, and I think we spoke off camera about you're a typical estate agent, had like their shop window, and that's it. Even when everything's closed, people can see what's going on. And I think it was like, a gentleman that was speaking to me was like, look, if you don't put yourself out there, there's people that are not even doing anything. They're actually fraudulent, and they're putting themselves out there. So by you not saying what you're doing, if you have an expertise, you're almost doing not just a disservice to yourself, but to like the wider community that potentially want to learn as well.
True that.
So I think put it out there and engage with people.
100%. Wow. Kazy, thank you so much. So what's the plan? What's your? I won't even ask you for your 5-year plan. What are we trying to achieve in the next couple of years?
So we sponsor Most Wanted Elite, the football team.
Okay.
They're doing.
Never heard of them.
Yeah.
Where they play?
They're they're like 12 to 18s. They're doing really well. Like, they won multiple leagues between the boys and girls. Like, FA youth clubs had players signed to Chelsea, Arsenal. So they're really smashing it. So sponsoring them was important. Grassroots football, being able to liaise with different people. Like, so I'm hoping to bring in some like banks to be able to come and sponsor, but not just sponsor them financially, but also do talks on money management, because if you've got some of these young boys and girls that have the potential to earn exponential amounts of money, you want to be able to involve them in the process. Just doing like some more ventures. So like I mentioned Rowan earlier, I think do some larger scale developments hopefully next year with Rowan from Featherstone Homes. Continue to finish hash out my projects. Got sort of 4 projects that I'm dealing with at the moment. Sort of 2 coming to completion, 2 sort of very early stages.
You excited about those 2 coming to completion?
I mean, it's just that they're good. They're not like massive, but they're decent numbers make sense on them. So that's good. Continue to do stuff like, in the space, doing, I had a love-hate relationship with the influencer and the content creation, but it was only when I went to like industry, they're like, no, you've got to say like you create content in the property space because it's actually a niche, and it's like, it's that as well. So I think like branching into that a little bit, but really just I'm a developer at heart, so just focus on the development, build the business, and hopefully inspire some more people to get into property.
You know what's crazy, right? I definitely understand what you're saying about the influencing, but the truth of the matter is that it's like you were saying before, like if nobody's talking about it, we're all kind of almost blind to it. But there is somebody doing it there, and they're doing it well, but we don't even know who they are, how they did it. And you kind of you're just blind to it. You don't know it's possible
like
sometimes.
In that, particularly like in black culture, it's like we're almost scared to talk about money because it's dirty. So it's like, if you make more money, you've taken somebody else's money, you got a bigger piece of the pie. But like if you read like, I don't know, like Sapiens or economic books, like the GDP of the world has expanded year on year. So if the pie is getting bigger, you're not taking money from somebody else if you make more.
Exactly.
And I think just having that more, abundant mindset that, we can all do this if we put it out there. Me saying something isn't gonna mean somebody else is gonna take food off my plate. And it's nice, like, particularly like when I'm outside, like whether it's Brixton, go pop, and people are like, yo, I bought my first house because of you, or we just like finished our mortgage app and we're putting an offer in. And all those things, like you said, when you're tired and you're thinking long, like, I can't bother, this social stuff is long. So, do you know what, it's good.
Yeah, it's defo has its rewards for sure. Where can people find you actually on socials?
So socials is Property by Kazy, Kazy, all one word. That's on...
He's really sick. He wasn't lying about him being ill.
That we almost got to the end. So that's Property by Kazy, all one word, Kazy. Instagram, Facebook, TikTok now apparently.
TikTok is blowing.
Yeah, I can't manage my own TikTok.
You know what?
Ready,
we can talk offline.
I'm trying. And then obviously YouTube as well. It's like where the longer form content is for people that are really, they've heard the sound bites and now they want to do a deep dive.
Yeah, cool. Awesome. And do you have any final words for the listeners and watchers?
Yeah, man, the internet's not real. Just focus on, your wins, your own journey. Everybody's journey is different. Just keep running it. Make sure you got a goal, you got your destination, and just stay busy, stay proactive.
Awesome. Thank you so much, Kazy. Really, really appreciate you coming on the pod. And thanks so much for providing so much gems, so much value, sharing your story, sharing how it's working out for you right now as well. I feel like it's going to inspire a lot of people. So many people want to get into property. So I feel like them knowing that it's actually possible that you can get to this level, I feel like it dispels a lot of like limiting beliefs, because a lot of people feel like they can't do it. So yeah, defo appreciate you. Listeners, watchers, I hope that you've enjoyed this episode of the Takeoff Experience. Thanks so much for listening. I appreciate you. I think this is going to be the last episode before the new year. So yeah, this is a happy new year from me. And yeah, we'll see you in the next one. Thank you.